TGIF Warriors, which stands for Thank God I Found Fill in the Blank. Hi, James, Michael, AJ, Kman, Ryan, Paul, how are you? So thank God I found blank. What is it that you found? Hello,
Fish.
Louise. You found fish? All right. Yeah, Friday, fish
It's
fry.
on Friday.
All right. I was looking at this article here, and I was thinking of you, Ryan. Um, you hearing a lot about this in the UK? BOE, Ramsden, very rapid runs on banks, a growing risk. Sounds like what happened to SVB here in the US last spring. Are people pulling their money out of the bank and going to higher yielding funds, or what's he talking
No,
about here?
to be honest, I didn't read it. It's the first anyone said anything about very rapid runs. So I think I'd have to look at the speech itself. It's nothing that's happening
Okay.
here at the moment, or there's no fears of such at the moment.
Because you would think that, it probably didn't just happen in the US where banks loaded up on debt from their country, um, a few years ago when we had zero rates, So
Yeah.
I'm wondering if that's a problem. Anyway, let's talk about what kind of the week that was. Euro had a good week. It's pulling back now. Think it's a double top, or we get a pullback, Ryan, and then one more push.
Yeah, very possible. Very
Okay.
possible. Again, it's after all the events, it's hitting the levels and it's holding the levels, the big levels. So that's what you got to take from these sort of weeks.
Okay.
What it has done and what it hasn't done.
All right. So we'll see, supply all the way up towards 112 or so. All right.
Yeah.
All right. And that's your daily. Really, I think the leadership, you still have to go with the commodity currencies. We're not pulling back like Euro and cable are right now in Aussie, and, talking about the loonie, when the dollar broke down, Canada broke down. And I think Blake was talking 33, but you could even get more aggressive if you want. This move from 39 to 35, and then tack on another four, you get 32. Um, One thing I'd like to, I wouldn't be surprised if Greg is here. I heard him say good morning. Are you here, buddy? Okay.
He
Anyway,
is not here.
okay. Anyway, what I'm gathering in my intelligence gathering, this break here that we have in the dollar, is this was just a four, kind of a weak four. So now we're in five. So I'm not saying I know where it's going to bottom, but, we probably bottom between here and here. And this will just complete the first wave down from 107.40. So then down here, you could look for dollar recovery. And I wouldn't be surprised if some dollar bulls start coming in there. I don't know why. Maybe yields will stop going down by then. Anyway, so I see two drives in US dollar yen. You taking any profits in here, or still riding it, Ryan?
I took a bit, obviously, in the moves. It's rude not to when you get a decent move, but
Yeah,
I'm happy
nice
to sit
trade.
in it and add on decent rallies. I'm gonna stick to this one.
And Blake is still riding USD Mex. Had a little pullback yesterday, but coming right back today.
No, I'm not. I pulled it off yesterday because the dollar, was clearly in breakdown territory, even though,
Yeah.
following Banxico, it moved lower. So we had,
Okay.
we had some Mexican peso strength as they as they cited inflation data. And as a result, I just got out and I'm like, okay, if we drop back down to 17, we get back down towards there's a big trend line through the
Yeah.
lows there. So it'd be a 1705. I'm like, I'd be a willing buyer down there. And of course, we're seeing a bit of a recovery today. But no, I'm not playing it. I was like, well, you know, with the dollar just breaking down, I don't want to be long dollars because you know it's one of those situations where the dollar if it keeps going, it would just drag everything down with it, you know.
Do you
So
have some downside targets in the Dixie, Blake?
you know, I was looking at it this morning, and the downside target I have is 101.25, and basically that's 161% extension of the most recent move, and it's a 78% retracement of the entire move of the dollar. But
Great
I look at
confluence, good confluence there, man.
it is, but I look at you know your euro chart you just had up, and you know that 110 level is obviously really big. I think what has to happen here is we have to start seeing the euro find some support ahead of, like, let's just call it 109 ish.
Yeah. Yeah.
And if it does, we could set up like a nice cup and handle pattern. Because
Yeah, I see.
I have to think about, and I think we all have to think about the, you know, all this divergence between, you know, these central banks, that what transpired this week. I mean, obviously you have the FOMC, which is, you know, playing into the you know, we're not raising rates anymore. We're actually talking about cutting rates. And I know the ECB says they're not talking about, you know, cutting rates right now. That's what the information we have with the market. It's hard for us to believe that, especially when you see the PMI data that came in overnight. You're like, how can they not cut? But we just came off of a week where, you know, we have to kind of listen what they're saying, I guess. You know, I know a lot of people say, well, why do we even listen to them? Because they were the wrong about inflation initially. But despite all that, we might have U.S. weakness or U.S. weakening data in the weeks ahead, and it could start with today. I mean, we have PMI data is coming out here, and how long do we have, Ryan, until that data comes out? Off the top of my head,
Hour and about hour and a half.
yeah, thank you. So you know, in just a couple hours, we're going to see, you know, U.S. PMI data, and it's going to be really interesting. You know, if you start to see that data weaken, you know, that's where people will say, oh, wait a second, you know, maybe the US is maybe on weaker footing, and that's why the Fed, you know, maybe why Powell was so dovish. I actually think he was so dovish this week because he's a puss.
Yeah.
I'm sorry, did I just say that out loud? I did. I think he's a wuss, and I think he just he buckled to the pressure of the rest of the FOMC members. But that's my take. And I can't believe I just said that out loud. So
Okay.
I'm going to pass it back to you, Dale.
Thank you, Blake. Kman, how are you, buddy?
Hi, coach. Hello, everybody.
Good morning.
Hey, buddy.
And it's Friday. I'm doing quite all right. Happy to have survived this week.
Do you feel
it's not
physically
over.
tired? You feel physically tired after a week like this, Kman?
I can say I feel a bit mentally tired.
Mentally,
but,
okay.
Nah,
Yeah.
physically I'm coming out of my cold, still wrestling with it a little bit, but that's going a lot better. So I'm feeling all right. I had a good night's sleep.
So what do you think the next couple weeks of you know, half weeks or 3-day weeks for the rest of the year? It really doesn't push me to really want to do much.
No, that's exactly what I said as well on the flow show. I mean, all of my positions are smaller than what I may have during the year. I still have the impression that risk may do okay to end the year, but of course it all depends on how the last data that we are going to see come out. Yields will likely. I don't think that unless we get crappy data, of course, I don't think that they should crap out a lot more. But equity markets, commodity markets are kind of holding up. So I think risk may do okay for the end of the year. Also
Yeah.
because there's still seems to be enough liquidity. Powell gave his version of the RRP and things. Yeah, I'm looking at a relatively positive risk environment to end the year. So, and that translates for me to be a bit short euro because I still don't like, well, despite what Lagarde may say, I still don't like the euro data. But I do like stuff which are going to be then a bit more risk positive, which is perhaps a bit of sterling, a bit of Aussie. Those are,
Yeah.
but I have the main positions now. I'm short a little bit of Swiss, but I think that's more of a, how shall I say, a lifestyle than a position.
Okay. All right. Well, one thing I noticed, I could always find something negative in the most positive situations. And it's Microsoft. I don't know if it's a big deal, but yesterday's rallies, the mags didn't do much. They really haven't done much. I mean, here's Amazon. It's gone nowhere since November, and it kind of put in a bad day.
I mean, it's,
when
Amazon, as you're pointing out there, Dale, it is struggling around the long-term 618 retracement as it has for the
exactly,
last several months.
God, you are good. Look at that. And, Blake spends a lot of time for him to have known that. Here it is. Yeah. So great minds think alike, Blake. So it's struggling here. We could get a nice break. And then, let's talk about NVIDIA. I know it's not crashing, but normally on a run like this that we've had, NVIDIA would be at new highs instead of, trading here. I'm not saying we can't make new highs, but this usually would lead. Now, if it's going to go, it has to be carried by the market. That's different. So, I mean, if you get any pullback in the market, I think NVIDIA could still be vulnerable. So, anyway, they're buying a lot of the junk, actually, Blake. They're buying a lot of stuff,
Go take a look
Uber.
at the Russell 2000. Pull up that chart.
You're right. That's a junk.
Yeah.
Okay, so everyone's going out on, some more spec stocks now, and they're using maybe the Mag 7 for funding to do to rotate into cheaper things.
Yeah.
And that's what happens at the end of a long wave is we get that speculative, maybe we're just going to go parabolic for a while in the market. Maybe one pullback and then we just blow the whole first quarter.
Your buddy Jim Welsh, he's looking for 4,900. He mapped out a way that we could do that. And
yeah,
if you think about, like,
that's conservative, Blake.
Yeah, maybe it is. And here's the thing: we are coming out of we've basically been the Fed has been raising rates, and we just finished that.
Yeah,
we just finished that campaign, and now you're talking about rate cuts. So, theoretically, the Fed shouldn't start cutting rates until there's reason to do so. And if there's reason to do so, it's kind of like, well, where there's smoke, there's fire. But at the same time, the markets do like, rate cuts. So at least until the data starts to weaken, until you really start to see earnings give way, the jobs market give way, which we haven't seen. We haven't seen any.
We have a blow off.
Yeah, we could have the stock market really take off. I mean, why not? And here, I'll just show you something real quick. When he was talking about, and I say him, and I'll just go reference Jim Welsh because we were just talking about him a second ago. If you look at the 161% extension of the S&P, now I still think that the market is range bound, but the upper end of the range could be tested, if not slightly broken, like this. Like, you look at all-time highs in the S&P, it's at 48, whatever, 4840, 4850, somewhere around there. 4,900, and this is the weekly chart, by the way. It's not far above that resistance. You could think, the market rallies into new all-time highs, on, the potential for rate cuts, gets everybody long, and then we get a reversal, and we're still, theoretically, you could argue if that's like a situation like that happens, we'd still be in a range, right? Which I still think we're in a big range. Like whether we violate the upper end of that range slightly or not is entirely possible. I just don't think we're in this environment. I don't think the growth would, constitute that type of environment.
It
But
looks like a breakout. I mean, when I look at this, if I really wanted to get bullish, I would look at the all-time high and then the low at what, 34.5 or 35. So that's 1,300 points. And this is a huge
this one right here.
four-wave triangle. All we did was move sideways, and the trend line you have here shows a breakout where, 4,600?
Yeah, well, it's 4640, 46, yeah, right there. And so, well, that's, and I think that's the way you have to look at the market. And we were having this conversation inside, the ForexAnalytix community. We were talking in the chat room about like know where the market's wrong. And I think the market, if you're bullish, you're wrong below 4640. And while we're above that, there's zero reason to be short. Right.
Exactly.
And then on top of it, you take that, we are in the last couple weeks of the year. And, if you own stocks, like, why not continue to own them? There's no reason to sell them. Right. And the Fed gave you every reason to hold on. So now the question is, in this lack of liquidity, do we just continue to grind higher? And that's when, you look at today's data. If the US PMIs come in weak, let's like talk porridge, right? It's like is it the bears? It was the three bears. Is that the old story, right?
Yeah.
The porridge isn't too hot, isn't too cold. If it's just kind of just right, let's say the PMIs that we have today, which you'll see right here, and you got Empire State Manufacturing data coming out here very shortly, but the PMI data is what we're going to be looking at more. Let's say that the services PMI comes in around 50, still expansionary, but weaker than expected. Maybe the manufacturing PMIs slip just slightly. It's weak, but not super weak, enough to constitute that the Fed's cutting rates is validated. And next thing you know, we'll have the S&P grinding out a new high, and we'll close the week, well above 4750. Seems like a very likely scenario. What's that?
Yeah, it's good analysis. So, yeah, I just wouldn't be buying the mega cap growth here because they're lagging. Find other groups. The banks look great.
Yeah, we pointed it out, right, Dale? It's rotation. It isn't.
Yeah.
You're not seeing the Mag 7, you're not seeing those like
Look
sell
at
off
Microsoft,
and then the rest of the market sell off. The rest of the market's picking up the slack. So, I mean,
they're using it to fund. They sell their Microsoft, and then they could go out and they have a ton of funding to go out after some of the, Russell 2000 type.
Yeah, look at the Russell 2000. Look at this. I mean, we're nearing range highs. That's a freaking huge rally. I mean, look at that. And
Tom
there's
Lee
a lot to go.
It could go to 4,000.
Oh yeah, you start looking at range extensions, and we're going a lot higher. It's potentially there. People want to deploy money in different places. So and I'm not saying that that's it is crazy, right? But look at the Dow.
Yeah.
So anyway, but what's really interesting is the DAX is actually on its lows. I blogged about this yesterday, and I believe that if you are long German stocks, that this is where the rotation is coming out of. Like everybody was long Germany, thinking the ECB is going to cut rates. Then yesterday Christine Lagarde poo-pooed on that, said no, we're not even discussing it. Now, that gives room for the DAX to come down and, the S&P and other stocks, the Russell and everything else to rally. Trying to explain, this concept of how money moves. You got to follow money, right? It's everybody's like, oh, risk aversion, the dollar's gonna automatically go up across the board if you start to see stocks sell off. That is simply not true. Because what happens is you have the dollar the money gets deployed from one direction to the other. So if you're seeing money come out of the DAX and it's going into Russell, it's just being shuffled from one end to the other. The dollar really tends to respond well during risk off if you see a meltdown in the markets, which obviously we're not seeing right now. So that's why the dollar can be really mixed. You can see it go up against certain currencies, down against certain currencies. So when you're in a risk off type of environment, you have to be really careful about just blindly buying dollars. It ends up being more of a selection process in a situation like that. But anyway, one of the other things, Dale, that has me thinking is look at this complacency and volatility. I mean, VIX is just, we're at lows we haven't seen since, well, let's go take a look, since 2019. Crazy, right?
Yeah,
Yeah.
really.
So, well, let's do this because I know Ryan wants to check out. He wants to get on with his holiday shopping. And by the way, I was just going to say, the euro, Jason in our chat room, he brought this chart up yesterday and he's like, hey, we're up against really big resistance at 110. We are,
Yeah.
and rightfully so, it held. Now, I think we could be developing a potential double top, could be a cup and handle if we, find some support around 109. But and that would just be leaning into, central banks, and that's why I think that this is a possibility. But going back to Ryan, what do you think going into the end of the week? How are you going to play the PMIs today?
I'm not going to be here. I'm going to be out doing that shopping.
That's right. You're going to be
yeah,
out shopping. So how would you play the PMIs if you're going to be around?
Yeah, it's another tightrope data point because last month, we were just hovering around that 50 expansion contraction level in manufacturing, and we're still there, 49.5. So if the numbers come in positive, to what Dale was saying earlier, you're going to see the dollar moving. We've got a big disparity between what the Fed says they're going to do with rates, 75 basis points of cuts, and what the market is saying, which is 150 basis points of cuts. So this sort of data is now going to adjust those expectations. You're either going to see the market moving towards the Fed or the market moving further away from the Fed, depending on whether the data is good or bad. So good data today. As long as if it's a big, strong beat, for example, then you're going to see the dollar rally, yields rally. But it's not going to change anything, like you said in the chat room. A big PMI beat isn't going to reverse what we've just seen over the Fed. The market knows cuts are coming. It's just a question of when, now, and how much. So, strong numbers. If it's a 50, 51, 52 print in manufacturing, the same for services, dollar's going to rally, yields are going to rally.
And dollar looks broken. I mean, you look at the dollar here, and I got asked, earlier this morning when I first, woke up about, the dollar index. I think we can pop our head back up to 102.50, but this is going to be an opportunity for people to sell into it. People are looking to sell dollars right now, and I think that it is, very strong likelihood that we, revisit that area. Maybe even the lower end of the range. I don't see that this is off that is off the table. I think that we can test lower levels in the dollar. So
just look at 10-year yields. That tells you the story, and it's told you the same. Dollar yen's walking the same path as 10-year yields. It's hit a low. It hasn't quite hit that low again today, so that it's stopped crapping the bed, but the bounces are very weak so far.
And just so everybody knows, the 10-year yesterday completed an inverted head and shoulder pattern. It had been developing for the last several weeks. We've discussed this multiple times, and it completed yesterday. So let's turn it over to Kman. Kman, what do you see and how do you see the picture changing here, or do you see the picture changing? I mean, you know, do you continue to sell dollars in this environment going into year end? Do you think that the euro rally is overdone? How are you feeling here?
Well, first of all, I think as as my position say for now, I think the euro rally is a bit overdone compared to the data that we're seeing. But if it's against dollars, that again will be the data telling us. As we have been saying so many times, we are data dependent. If the data really suck, probably going to retest 110 and likely likely break before the week is over. But if those numbers in the US continue to hold up, I reckon the party for the euro may be relatively short-lived. Really, I know I'm a bit biased against the euro, but I think the data did not support the ECB. The ECB just wants to hang on for longer, probably perhaps even thinking that a stronger euro is going to combat inflation. But I don't buy it really, unless US data unless US data really turn around. Now the other currencies are a bit of a different story. I do think that we saw a decent break of the Aussie, for instance, and possibly cable as well. So that's a bit of a different thing. And if you look at the whole year's ranges, euro dollar versus the rest, it has been a relatively stable year for euro dollar, but the rest has been moving around a lot more. So I think that can continue for a while.
Yeah, and look, I mean, that's why I look at the euro and I go, you know, if we broke 110, I think the upside's fairly limited for the euro. Even on a breakout, if we broke to the upside, I think, you know, maybe 111, and this is kind of where I'm looking at. Maybe 111, maybe it could stretch its legs to 112, depending on, you know, if the US data was really weak over the course of the next, you know, let's just call it, you know, several weeks. But and even, you know, and let's say technically, let's just call this technically. So there's your 4-hour chart, right? And let's just say this ends up being what I think is developing a cup and handle pattern, right? So this move, just to keep it in context here, the upside would be limited to about 113. So it's not like, you know, it's going to uncharted territory. It's not like, oh, well, you know, hey, you're projecting the euro to go to 150. I'm not that downbeat on the US, and I hate being too downbeat on the US dollar when stocks are where they're at right now. So it's hard for me to look at that and say, oh, here we are with, you know, the stock market nearing 5,000, yet I'm super bearish the dollar, because I know as well as everybody else that if stocks do come down and we do see a recession and we see the S&P back at, let's just call it 4,200 or 4,000 in the first quarter of next year, the dollar will reciprocate and it will be bought, especially against certain currencies. So I don't see the dollar going too low, basically. So yeah, it's going to be really interesting going into this next year. Oh, we have data coming out. We have Empire. Thank you. So let's the data will be out in 1 second. Let me just pull up the dollar really quick since we're talking about it, and we're going to see what happens with that data. Let me just 15-minute chart. Here's your Empire State Manufacturing. Dale, do you have an interview today?
No.
Okay. All right. Well, we're gonna after this data comes out, kind of wrap it up. We can wrap it up and kind of talk about our expectations for next week. Let's see. We still got 15 seconds. Dale, what do you think here? What do you think is your head about ready to explode after this week?
No, I mean, I got the dollar right. But I'm
Week.
prepping myself for,
Week.
some type of low to come in and maybe next couple weeks or early next year. And then I think we could see a pretty good dollar rally because, from 107.20 to say 101, 61.8 back could take it back to where we were earlier in the week, 107 euro, 108. So I think that's the next move is we complete this first wave down and then we get some type of failing rally that could take us back closer to 105 than we got this time.
Really?
Is that confusing?
Really? I mean, you want to play the dollar. You want to play the dollar on the long side from here.
Well, I've been short and I'm looking for a low, maybe 100 lower than where we are now, like where you had all that confluence.
Mm-hmm.
Par 90, 101.20, I think par 90, extreme 99.90, but that'll be the end of the first decline, the first wave from 107.40. And then look for fib retracements from wherever the low comes in for a better short in the dollar or equal to where we like Kman was talking about the Aussie never got hit. Well, maybe the Aussie goes to 68 here. But then the next time we pull back, maybe a shade under 65, and that'll be the buying opportunity in Aussie back at that range, 64 and a half.
All
So
right.
just a bunch of guesses, Blake,
Yeah, I mean, well, I have to. I will say that the dollar looks a little wounded here. We're going to go into the week. We're going to go into the end of the
That'll be a
week.
lousy weekly candle.
It
Yeah.
is, yeah, it's going to be an ugly, ugly weekly candle. But at the same time, I mean, look at how well the dollar is responding with that data that just came out. So, we had some very weak data, and the dollar is not looking so bad at this point. So,
Yeah.
Ryan,
Well,
final
good.
thoughts
Divergence will build. We need a
What's that?
pop. Well, we need some type of firmness so that I don't want it to go straight down to that level because then you'll have confirmed momentum with the move. So I want to see a little two-sided action into it. Sometimes it's not the fib, but how it gets there, bro.
Oh yeah.
You know what I mean?
Yes,
Anyway.
100% agree. That's why a lot of people, I always get like questions on, well, if you think this is such a key level, why don't you just sell it when it gets there or buy it when it gets there? And it's like, well, I want to know how fast we got there.
Yeah.
Why we got there, what data was happening around that time we got to that level that I was looking at. There are certain instances overnight that I'll put in orders because it's overnight, but on big levels, big reasons, like why don't you just buy the dollar index when it gets to 101 and then just go with it? It's like, well,
because the RSI could be 20 if it does that right now,
right?
And that would mean the move is being confirmed,
right?
So I'm not going to fade that.
No, there's a lot of when assets get to levels, for me, it's all about the why and how long and how did it do it? So yeah, great coaching, coach. How about that?
Yeah. So
Ryan, what are you thinking going into the end of the week? I know you got Christmas
let
on
him
the
go
mind.
shopping. Let him go shopping.
No, you got
Trust me,
Christmas going on.
It cost me my half year's profits if I go shopping with the wife right now. Well, I say this every year. I said it last year. I'll say it this year. We've come all over the big events. We're coming into the end of the year. We could have some shenanigans next week with all the books squaring and whatever. Take a snapshot how this week closes and use that as your reference going into the new year, whatever happens next week. If there's some funky wild moves, don't rely on them as being, changes to Fed rhetoric or fundamental policies and whatever. Take what happens at the end of this week, snapshot it, and use that going forward in the new year.
A friend of mine used to say only the shortstops trade during this time frame.
Yeah.
You know, most of the big guys that close their books are just, you know, leaving it to the amateurs for a few weeks. Like
so
me.
you guys see this headline here. John Williams is saying we aren't really talking about rate cuts right now. Let's focus on whether rate policy is in right place. So the dollar has obviously strengthened as a result. And you're seeing the euro, well, here's the dollar. We're coming right to basically the breakdown points. So it's going to be more of the make it or break it here at these levels. You can see it right here. So I would assume that the euro finds some buyers down right at these levels too.
Yeah.
So there's the euro right to that red line that I had drawn out. I think this is going to be the level where you start to find people buying euros and selling dollars into. So anyway, just a little heads up. Especially with the PMI data coming out. So we're still seeing a little bit of volatility. Kman, what are you gonna do going into or thinking going into this weekend?
Well, unchanged really from what I said earlier. I mean, I'd rather do crosses than dollars right now. I mean, Williams is fighting back against what Pavel was saying. Yeah, I still think the euro is going to look a bit stretched, you know, if we have that run over 110 up to wherever it may go. But I think the rest of the currencies, and Dale was also mentioning the Aussie, and that's one of those. I think one of those who could do relatively well into the year. And if my assumption that risk is going to continue to do relatively okay is right. And that's about it, really. Take a look at dollar rand quickly if you want, Blake, because it tagged the November low and it's bouncing again right now.
Oh yeah, it sure did. We did hit that that low right there and are reversing. Well, you know, hey, the dollar's catching a bit as we go into
Williams.
the weekend. So, and we can thank Williams for that one. That's for sure. Wow, that's great. All right, guys. Well, with that, that's just like I'm not trading the dollar right now. It's like,
yeah, I
know. Why do it? Why get yourself stuck in you know, like in
enjoy
trade?
the holidays, Blake. We worked hard all year.
No, that's it. You know, it's like
You know?
I have the desire. It's like, okay, it's a Friday. Do I really, really want to be buying euros here? Do I really want to be selling dollars into this? Yeah, I think I'm going to join Ryan and go do a little bit of Christmas shopping.
All right. So that should go to the rest of our attendees that are here and viewers. Go enjoy yourself, you know.
Exactly.
It's tough work that we do. It's demanding as hell. And we all need to recharge our batteries once in a while. Okay. Or replace it. Anyway, have a great weekend, team. Thanks very much. You know, I really enjoy listening to you three guys while I'm here hosting. Yeah, happy wife, happy life. I have another tip for you. If you're ever in an argument with your wife, just look at your shoes and things will calm down. Anyway, anyway, have a great weekend, everyone. Thanks, Kay and Ryan and Blake.
Cheers.
Yeah, thanks, gents.
See you guys. Don't just count your pips, count your blessings. Adios, everyone. Look at your shoes. All right. It's better advice than your shrink will give you.